Good morning, everybody. Monday, March 27. It's just 6:30 in the morning. I'm a little late this morning. I apologize. The heat is really kicking in. So anyway, really quick, I've posted a couple of trades in the spread room. The risk trade being 40-15, 40-10 calls, bearish calls, buying the 40-15, selling the 40-10s. It's $1.40 credit right now. 1% is 40-10-70. We've closed green on Thursday and Friday. I've gone over this. I'll go over it again. We have one close above 4,000. That's at 4,287 since we posted the high of the month, which was back on March 6th. I'll bring it in over here. And yeah, it was last week on Tuesday. We closed at 4,287. The next day was the Fed day. We had our spike. The next day after that, we rolled up to that 4,007. A lot of guys that were in bearish calls got shook out. And then we had the sell down from 4,007 down to 39.19. Closed off the week at 39.70. Like I shared before, we've got 2 green weeks in a row. So going all the way back to the October lows, even going all the way back to January, it was during August. We did have a couple of green weeks in a row when we had that rally off of the June low into that August high. 2 green closes in a row. Again, going through that streak of how very rare it is to get 3 and almost virtually impossible to see 4. We do have 2 green in a row right here on Thursday and Friday, so the odds are pretty much stacked against anything that is bullish. However, I have also thrown in a Kool-Aid crazy risky trade, and that is that we close red on the day, that we close below 39.70. That's buying the 39.75 calls, selling the 39.70 calls, and that's at $3.60. Sorry, $3.70. I mistyped it. It's a $3.70 credit with a $1.30 risk. You're looking for a close below 39.70. Looking at the futures, we got a run up immediately after we got started on Sunday night, right to that 4,027, still below the 50-day moving average. Hovered it all the way until we were getting into the EU Open, and the EU Open we sold off. We were red for about 30 minutes. Right off of that, bounced up, and here we are kind of just trolling around. Again, looking at a 5-minute here just from where we are. Want to go back here on a 1-day 5-minute so that we can get Friday. And here's your Friday lows. Your just straight up algorithm run up all the way here into Sunday night. And now here we are flattening off. Remember, it's the end of the month. Remember, it's the end of the quarter. What that means is...
So $51 trillion of debt up from $33 trillion doesn't bother you?
I think the path that is set out in the president's budget is fiscally sustainable.
So, come over onto the NQ, and the NQ is doing one of the most horrific things that I see when I'm over here watching this every single day, and that's that you get so bullish that every dip that you make just only drops down to the 5-day moving average, and the 5-day moving average supports it. So here we are on the NQ, little bit of a spike up, supportive. You can see here it's very inactive over on the NQ, and pull you over to a 1-day just so you can see where we were on Friday. And again, you see the exact same algorithm straight on up into that move into the end of the trade on Friday. And now here just kind of flattening off, even though you did have a very nice dip as we came here into early Monday morning. The Russell, a little bit more volatile over here on the Russell, how it is hanging just above the 5-day moving average and resisting on the 10-day moving average, because again, the Russell being that one that's kind of the canary in the coal mine together with the Dow, but same thing. Over here, 9:30 in the morning on Friday, algorithm move into the end of the week, and here you are just kind of hovering around. So you're not really looking at anything that's extra fantastic. But you do have your major pivots. Your major pivot over here being 39.28 down on the bottom side from this dip that we had here off of the big move down from the highs. You got your 40.78, which is our March high. As of now, it does factor in perfectly for that full moon, being it was 1 day prior. Had your move down, you've got your 40.1781, which has been very, very strong. Our old charts back on February, that 40.20 was an extremely good resistance area. 39.80, an extremely questionable support area. So here's your 39.70, here's your 40.20. You're right in that 50-point range. And as you can see here, this is really a whole bunch of spaghetti as we got off of that FOMC meeting. We had that rising wedge pattern going into it, got your throw over, got your throw down. Could be that it is an ABC and that we are just moving here into a flat, but I don't really like the expectation of this all of a sudden taking off and going, crazy bullish, breaking 40.78 and moving up higher. But what you are going to need to remember during the entire course of this week, all week long, you are going to need to remember the number 39.63.34, 39.63.34, 39.63.34. 39.63.34 is your March open. Now, 39.70 is your February close, but I look at the open more than I look at the previous month's close. And as we head in here to kind of bring you into something that you can see a little bit better, bring you here to 5 years onto the monthly, and I hope this is not a detailed chart, and good it's not. You'll have to bear with the drawings that you have right here, but right now you are working with a fractional doji over with what we've got because we closed at 39.70. 39.63 is your green month. You had a red month in February. You had a red month over here in December. You had 2 red months in a row over here, August and September. Doji right here, over here in May, and then you got your follow through back over in June off of that March high. This was April, the big sell down. You had your 2 in a row over here in January and February. So 2 in a row is not a bearish setup where you're looking for further downside. It's basically giving you a warning that you're going to be getting a little bit more. However, at the same time, and you can go back as far as you'd like, we do get a doji candle at the end of this week and close somewhere within that 39.80, 39.65 area just so that they can be green for just a few points. That would again lead me into the position of that we are undoubtedly heading a lot lower as we go into April, as we go into our earnings. So real quick view, again, just to give you an overview of what we've got looking here at the SPX weekly. And yes, when we got down to that 38.08, which if you remember, we were getting bullish at that time, we were fractionally starting to warn that we were a little bit overbought or oversold on the weekly. Come over onto the daily, and you can see very clearly why we were getting bullish at the time was because we were very oversold on the daily. Our dailies right now, they're not really giving us too much indication. They're kind of just moving around flat saying, we're on the beach. We don't see any reason to swim, but, we also don't see any reason to leave the beach, So all I can do to kind of help move it around a little bit better is bring you onto the hourly charts and looking at the 60-minute time frames. Give me a sec. Again, over here, just looking at it from an RSI point of view, got really overbought there as we went into the close over the weekend. Now, setting up with a sell divergence, but you've got no commitment whatsoever. The Dow still 50 retracement, hanging below 50 retracement to the October lows. So nothing at all spectacular. Come over here onto the NQ. Very same thing over here on the NQ. You got overbought over here when we had that spike up on Thursday. Now, fractionally overbought as we went into the highs over on the weekend and just flailing off as we are here. So, again, nothing extra spectacular with any major signal that's throwing out to us. On the ES, on the hourly, the exact same thing. I mean, it's kind of repeating itself, but The way that we're looking here, here was your FOMC spike back on Wednesday. Here we are looking around over on that spike that we got on Thursday. And then here you are with a basically, please, can you sell off so that this RSI can confirm, because we are not going anywhere quick. And here we are with the 50-day moving average, as you saw earlier, right there at 40.16. So we're really, really flat. It's really waiting for someone to make a mistake is what it is. And one thing I can share, again, here being the Russell 2000 and how weak that it is, one thing that I can share just from the view that I'm getting from some of the people I respect and follow is everybody's looking for this to be a catastrophic down red week. So you're going to need to watch that the one indicator, the one and only indicator, and that's QQQ. This QQQ is going to be the one and only thing that is going to give anybody an idea as to what is going on. And as long as we're above that Toyota Corolla at 308, we got nothing that we can do. We got nothing. In fact, during the course of this week, that 308 is going to be we could call that our bottom. Until we can get a close below 306, that 308 is as low as we should expect for the entire week over here on the QQQ. Breaks, we got a different story. So anyway, guys, have a fantastic morning. I will set you up in chat in a little bit. Finally found a way to get these videos to upload a little bit quicker, so I'll get it done, get the email out. Have a good morning.